You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block, everyone's favorite, I'm sure, bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting, ever-scintillating Options Insider Radio Network. 13 programs for you guys to choose from on said network. Well over 1,000 hours of archive material, as we'll get to a little later in the listener mail. Some people are discovering our app and biting off perhaps a lot more than they could possibly chew. But a lot of that, including nearly 400 of those hours just from this one program here, the Option Block. So a lot for you guys to really sink your teeth into. If you're hungering for some options content, well, we've got it for you. If you got a long commute, you got a long flight coming up, or you just want to really just while away your hours at the office listening to some quality options, analysis, information, education, all that fun stuff, unusual activity, we've got quite a bit in store for you. Of course, you can find it over there at the mothership, theoptionsinsider.com, or you can surf on over to wherever you find your finer podcast programs, iTunes, Stitcher, Aha Mobile, SoundCloud, wherever you find those things, or just paste the RSS feed into your podcatcher of choice. So just go ahead and use our mobile app. We put it all in there for you. Available for iTunes, Android, and the Fire OS. So no shortage of ways for you guys to really bite off a boatload, to use a technical term, of options content. And joining me today to add yet another hour to that endlessly growing amount of content, I am joined by two compatriots, starting off with the man holding down the seat over there at the Option Pit World HQ, Mr. Mark Sebastian, the founder of Option Pit. Mr. Greasy Meatball, welcome back to the program, sir.
Hoity, hoity, hoity! Ha! Woohoo! Yeah!
So that, I'm taking that to mean that is your rally mode. Is that what that is?
I just got done riding that rally. Holy 88 handles.
Yeah, this was something to behold, something to talk about. This is going to be a lot to sink our teeth into today. Before we do that, let me introduce our other cohort, Uncle Mike Tusaw, of course, still on assignment there, a very desirable assignment down there in Mexico on vacation. So he'll be back next week. In the meantime, holding down the other hot seat, the Viceroy himself, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program. Do you have a similar rally call that you use on days like today?
I do, but mine is a bit more subdued than Mark's. I am hanging my Janet Yellen poster, framing it and putting it up now because she is my new teen idol.
Yeah.
Mrs. Jacobson, better look out.
Yeah, Janet is the equivalent of the Farrah Fawcett poster in high school.
Wow, that's some strong love there, sir. Strong words from the Viceroy.
Think about this. Tomorrow we could take out 18,000 on the Dow. I mean, and we could take out 2,100 on the S&P, and it's an expiration tomorrow. What fun tomorrow's going to be.
Yeah, she's just almost single-handedly just lifting all boats over there, Miss Yellen. So I think without further ado, let's get right to it. Let's dive into it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, you know what that means. It's time to break down the day's activity in the markets and the broad indices, what caught our eye. And as everyone pretty much alluded to, it was rally ho today on the old street. Pretty much, yeah, all of the major indices, the S&P, the Qs, and the Dows, all closing up over 2%. The Qs leading the charge up 2.3%. By the way, we're recording this Thursday, December 18th for all of you playing the home game. Just rally ho anywhere you look. Pretty much a sea of green on the screen today. I think only two I have on my watch list here that are down are COSI, which is kind of neither here nor there. It kind of moves to its own drummer. It's under $2. Demand Media off a little bit as well today. And Netflix actually taking a little bit of a slight beating, and given the fact that everything else was up about 2%, down about a quarter of a percentage point is actually a decent sell-off. Other than that, not a lot of really red on the screen at all, except for the old VIX cash, which took a bit of a drubbing, as you might expect today. All the markets rallying. VIX cash selling off, closing today 17.12, down about 2.3 handles on the day. So a very, very aggressive day. A lot of places to start. Perhaps, Mr. Viceroy, we shall start with you. In addition to your newfound love affair for Miss Yellen, what else caught your eye out there in today's just whirlwind of upside activity?
Well, in all deference to Mike, Apple taking out the 111 level, that's pretty incredible performance. To your point, the only red I had on my screen other than VIX was Amazon, and it almost got back to break even when I logged off a couple minutes before the close. But when I reached out to John Grigas this afternoon, and I said, any standout names? And he said, it's everything. It's energy is still lagging a bit, but energy, even though the physical commodity was down a little bit today, energy stocks had small gains. But the couple of things that were the standouts today was Apple taking out that 111 level, Baidu, which was up near the close about 9 handles. Facebook up a couple points. Grigas said we had some activity there, and Priceline up a little over 30 handles when I logged off to go onto Skype. So it was a little bit of everything today. But I think the big story today was the averages and index settlement tomorrow morning. Today's kind of that classic day when you need to remind people that if you had out of the money premium on the SPX, the NDX, or the Russell, and you were just going to let it sit there, you're going to leave that option out there rather than buy it back for a nickel or a dime. If this carries through tomorrow, that's going to be a painful day. So, but it was everything today.
Yeah, people often wonder why we counsel them to close out those things that are the shorts, particularly that are close to the at-the-money come expiration time. It's from hard-won experience and days like today that could make even those piddly out-of-the-money calls you probably forgot about all of a sudden worth quite a bit. Of course, a lot of the market rally coming from a variety of factors. Of course, we talked earlier about Janet Yellen really talking up the market yesterday, and, of course, continuing that love affair, including Alex getting his poster, continuing in today's market, as well as, of course, jobless claims looking pretty good, off about 6,000 versus what was expected on the street, about 289,000 versus 295,000. It doesn't sound like a lot when you're talking such large numbers, but still the direction is what really interested a lot of people. So those two things combined with some decent earnings today. We do have Nike after the bell, if you can really call Nike jumping into this maelstrom having any impact on the market. We had BlackBerry before the open. You could kind of view that. They were probably up about a 1% on the day, so you can view them as maybe having actually underperformed, given everything else is up about 2%. But still, BlackBerry in the game apparently as well, trading right around $10 right now here in the after hours. So interesting stuff. Mark, I'm sure a lot caught your eye today. not just the sell-off in the VIX cash, but a lot of other things. What really caught your eye out there in today's activity?
The VIX cash was down, but if you actually look at kind of strike-to-strike volatility, implied volatility was up today. I mean, the S&P rallies 48 handles, and the VIX comes from basically 19 down to 17. That is, vol's not in. It is way up. And, especially if you look at when the last time we were at 2060, where the VIX was relative to now, their volatility is still bid. So the VIX itself has a lot to flush out, but it's not going to until we get a calming down of realized volatility. Realized volatility is through the roof right now. We've got basically back-to-back days of 2 and 2.5% rallies. Prior to that, a decent sized sell-off. So, that was the one thing. The part that blows me away is how are we surprised? I like to say that waiting for the Fed to raise rates is kind of like waiting for the Chicago Cubs to win the World Series. It is constantly wait till next year. All right, so there is no reason for this. I mean, there was no reason for any sell-off relative to the rally, relative to rates, and there's really no reason for like this crazy rally either. I mean, nothing changed. All right, other than maybe Russia is scaring people a little bit, but I've never seen. I mean, back-to-back 2 and 2.5% rallies is just huge, so that's why vol stayed bid. If we had moved this much over a week from the lows, the VIX would be maybe 13 or 14.
Yeah, you're right. It has been an interesting period, and I do agree. I am surprised at other people's continuing surprise at the Fed. If you've been playing that wait-and-see game on the Fed, you've been waiting and seeing for the better part of a decade now, or at least over a half a decade at this point. So if you continue to be surprised, it is indeed surprising to me as well that you haven't really caught on yet at what's cooking over there in Fed land. The markets were rallying. Pretty much Apple was rallying. Everything was rallying today, including a product that we've been talking about a lot on the other side of that coin recently. Of course, Crude. Our last show, we talked quite a bit about how Crude has taken it on the chin very aggressively. Well, Brent in particular actually triggered a circuit breaker today over there on the ice, but not to the downside, actually to the upside. Brent just off to the races to the upside, up about 5% at one point, I believe, in today's trading. So far, actually, that it actually triggered a circuit breaker over there on the ice exchange. They halted. A pretty brief time, I think only about 5 seconds, but still interesting to see. We had talked on our last episode actually about how a lot of long speculators had jumped into those markets. Not really a surprise given the levels that we're seeing out there these days. And a lot of them had, of course, been burned by the over 5% sell-off they had seen in that week that they had added on a lot of their long positions. We, of course, talked about the skew out there as well, reflecting some people starting to pile in to the upside in the call wing there and specking on a bit of a bounce here in Crude. And we saw that a little bit today. So perhaps some of those people who have been taking it on the chin over the past week or two are finally smiling out here in Crude land as we're seeing some circuit breakers to the upside. I don't think anyone predicted that going into today's activity. Alex, is Crude still lighting it up over there on the OX platform? And did this upside move today really spark any interesting activity? Maybe people actually coming in and loading up on some upside in Crude today?
There's been... our client base has been buying literally all the upside strikes. And I talked about this on a show previously where Grigas was telling me people were buying 80, 85s, 100s, thinking this is temporary. But Crude is still a big play. Interest rates have become a big play, too, on the futures desk. And Mark's point, I was watching Mark on Bloomberg today, and he was doing commentary about the 10-year. I think if at the beginning of this year we had forecast the 10-year rate right here around Christmas, we all would have been forecasting something in the 3.5 level. Now, again, to Mark's point, that was a year ago, but I don't think any of us thought 12 months ago that we'd be sitting here at 220 right now. I think that's a total surprise. And given everything that's going on in geopolitics, Mark mentioned Russia, but Bloomberg today scored Venezuela as I think a 93% probability of default. And Bloomberg today was kind of carrying the story forward that this was the spark in our move in Cuba, because the Cubans aren't getting the Venezuelan cheap oil anymore. And that kind of prompted or was a catalyst to some of this renewed interest in diplomatic relations with Cuba. So there's a lot of geopolitical stuff going on out here as well. And the U.S. market continues to be, the best place to invest. And that's part of what we're seeing. And I said it kind of tongue in cheek at the beginning of the show, but, we could see 18,000 on the Dow tomorrow. I mean, if this continues, we're a stone's throw from 18,000. Now, 2 days ago, we weren't a stone's throw from 18,000, but we're a stone's throw from 18,000. We're a stone's throw from 2,100. We live in real interesting times right now.
Mark, did this move in oil catch your eye over there in the pit chat today, or was it all equities all the time today?
No, I mean, we saw it was interesting. We really did have there was a period of time where the S&P actually had a two handle on its change midday, right before it rallied another 20 handles. And that was crude related. Yeah, there's a lot of guys watching crude. I don't know if we're going to talk about it in the odd block, but a stock UCO, which is the basically double long USO, saw a lot of activity today, which is kind of interesting. Yeah, I mean, we're watching oil. You got to, if you, at least in the near term, there is a silly, albeit real, trading correlation between oil and the S&P 500. And if you're to ignore it, is to ignore how the market is going to move. So that is crazy. But in terms of interest rates, yeah, I mean, I agree with Alex. I can't believe I would have thought we were 3%. Now here we are at 2.3. I just don't see any reason for rates to go higher. You raise rates to fight inflation, and we've got a growing economy and borderline and certainly disinflation. And, I wonder whether, with this move in oil, whether we do have some sort of, at least sectors of the economy that are deflationary. So why would you raise rates?
Yeah, everyone's been saying how does this crude really impact the overall macro perspective for the Fed? Certainly changing their analysis in recent weeks as oil has just taken it on the chin. Of course, reversing that a little bit today, but that's certainly a factor perhaps they didn't plan on discussing a month ago in today's meeting. Now, very much on the horizon. Of course, you did invoke the odd block just now. So that means it's time for us to keep on rolling right on into that segment. Indeed, it's time to parse some unusual activity in the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it is time once again for the Odd Block, the portion of the show we break down the weird, the wild, the woolly, and outrageous activity we're seeing on the street today. I don't really have it on my rundown here, but I think we'll dive into it because Mark did mention it. Of course, that crazy call activity here in UCO, that is indeed the ultra crude oil ProShare. That was down about 5.5% today, or about 62 cents, closing at $10.82. And Mark, looks like we saw just a flurry of upside calls. The Jan 2015 12 calls, to be precise, going up about 11,000 times. I haven't had a chance to parse this one a little bit. Do you know, was paper buying out there? Was paper selling? What did you see out there?
Paper was buying those. So there's a lot of people stepping in to buy those Jans. And then I think we actually saw some paper behind it in some of the long terms. But yeah, there was a big, huge buyer of the Jan 12s. So that is a name that, it's a poor man's way of trading into crude and getting something that will kind of move with WTI. USO has some issues sometimes on catching rallies in WTI. this, if the guy's right, is going to do a better job of catching upside. Of course, today with oil down, these buyers were taking on the chin. But hopefully, we'll see. They paid. They're losing about 20 cents on these right now. So I'll be interested to see how long they're holding on to these.
Yeah, and this is the name that does about 3,000 contracts a day, doing about 19,000 today. So you can see, listeners, just a lot of activity out there in that name. We'll keep an eye on it as well. Interesting to see that perspective. Perhaps not that surprising, but a bit aggressive nonetheless out there in Crude land. Meanwhile, we're going to move on into our first victim of the day. This is Mylan Inc., ticker symbol MYL, closing today $56.83, up $56.83, I should say, up about 3% or about $1.50 on the day. So moving beyond what the market is doing today. This is the name that does about 5,400 contracts a day, doing a whopping 23,000 today. And a lot of that activity, pretty much the lion's share of it, coming in one massive 10,000 lot put spread. We saw the Jan double, Jan 48 put spread going up 10,000 times. When we profiled it this morning, we just talked about the Jan double puts going up for $1.46. Of course, there was another leg to that spread as well. So a total of 20,000 contracts in that spread on the two strikes. 16,000 open on the Jan double puts, only 8,000 on the 48 puts. So it could be a bit of a roll, but it probably looks like opening paper probably on both as this guy is trying to establish this. We also saw this going up with some stock, about 300,000 shares being marked around the same time as going up tied on a spread. So a bit of an interesting one. Mr. Sebastian, what's your take here on this 10,000 lot put spread going up tied to stock in Mylan?
It's probably a bit of a, it's a play on volatility. It's a play on a rally. It looks like the guy is probably setting up a hedge and didn't mind buying a little extra stock to make his pricing easier. So that's my guess on this trade. Certainly, at its surface it looks bearish, but then you look at the action in Mylan, and you realize, the guy's probably thinking it's going up, not down. Yeah,
that was probably my my look at it here as well. Here, what's going on out there, and everyone's favorite name. I know a name I watch every day. Good old Mylan. Now moving on here to another name. This is Quicksilver Inc., ticker symbol ZQK, closing today $2.26. This is for all of our cheap stock aficionados out there, up about 6% or about 13 cents on the day today. And what we saw out here, well, first off, this is a name that does about 2,200 contracts a day, doing 31,000 today. So just lighten it up out here. And once again, pretty much all of that volume, except for, I think, 280 other contracts, going up in one massive Dece to Jan to call spread, went up 15,000 and some change here. So total of 30,000 plus contracts going up in this spread. It looks like paper selling for a dime, selling Jan, buying Dece. Looking at the open interest here, we see about 6,000 open on the twos and 15,000 and change open on the Dece twos. So clearly, this is a bit of a roll. Our friend here saying, yeah, I'm not quite ready to have my stock taken away here on the two handle in Dece. I'm going to write it again in Jan and hope that this dime does it for me here. Mr. Sebastian, what's your take here on our friend doing all this work just to collect a dime?
It's a $2 stock. So, a dime doesn't sound like much, but that's a lot of yield on a cheapy little stock like that. So, that's my guess. I had initially thought he was long, but I guess it turns out he sold the Jan, and that's interesting. So probably a close open, and just not ready to dump his stock, like you said.
Yeah, a weird one out there. Yeah, a dime is a dime, particularly when you're talking about $2. It has a little bit more relevance than perhaps in a name like Apple, shall we say. All right, and rounding out the old odd block today, we're running through it a little bit today, listeners, because we do have to get to some other stuff here. But really quickly here in good old Noble Corp, ticker symbol NE, this name closing today, $17 and a penny, up about 4% or so on the day. It's the name that does fairly decent volume on a given day, doing about just a hair shy of 10,000 contracts a day, doing 36,000 today, so well over 3x. Going up today here in Noble, and what caught our eye in particular was some downside on the Jan side, in particular the Jan 14 puts going up 20,000 times here, 20,594 times to be precise, for 34 cents. Went up in one giant block. That's an open interest of over 20,000, a little over 20,000 on that strike. So looks like it's a bit of a savvy close here with someone coming in and actually taking some profits off the table. We also did see about 3,000 of the Jan 17 puts going up on open interest of 1,200 contracts. So that is opening paper. It could be related. I haven't had a chance to parse into that one as much to see if that is our friend perhaps closing on the 14s and reestablishing much smaller on the 17 strike. Either way, interesting paper, perhaps well-timed out here in good old Noble Corp. Mr. Sebastian, take us home. What's your take on our friend here? Perhaps having some decent timing out here in Noble Corporation.
Well, he bought these on December 2nd he or she bought these on December 2nd for somewhere around the 15-cent range. And then they're dumping them at 34 cents. You know, I'll take 130% win. That's just me. Maybe you won't, but generally speaking, if I get a chance to take that off, I will. So it's certainly a close and looks like a smart paper. So if I saw something of that size. Now, Noble is literally half the stock it used to be. 6 months ago, this was a $32 stock. And a year ago, this was a $35 stock. Now it's $17. So it's been an ugly ride for this for Noble. And I'll be interested to see whether some of this extra paper, the rest of the paper kind of looks like a collary risk reversal-y type of trade. So that's what I think the rest of it was.
Yeah, I don't know about you, but I don't take anything off unless it's 140% return or greater.
So 140 greater?
Yeah, 136% just wouldn't do it for me. It doesn't meet my threshold.
Doesn't meet the Longo mandate.
140 or not. Yeah, you're right. Looks like a 3,000 lot of the Jan 20 calls went up too. So yeah, a bit of a collar / risk. Also some way upside the 25. So maybe a call spread financed by puts here. 2025 call spread financed by puts. A lot of weird stuff going on out here in Noble Corporation. Unfortunately, listeners, that's all the time we have for the Odd Block. Now it's time for us to keep on rolling right on into the Xpress Block.
The Xpress Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, like the man said, it is time for the Xpress Block, the portion of the show where the Viceroy dons his fanciest of fancy caps and takes us behind the scenes into the land known as Options Express by Charles Schwab. Details some cool new tools, some new upgrades they have coming down the pike that may interest you guys, as well as talks about some interesting client questions and feedback and trading activity. All sorts of cool nuggets coming from inside the old Options Express HQ. So, Mr. Viceroy, take it away, sir. The floor is yours. What sort of tasty nuggets do you have in store for us today?
So, Mark, thanks. The first nugget I want to talk about is end-of-year tax selling. And I don't want to turn this into a tax presentation.
The tastiest of tasty nuggets.
Yeah, but think about, if you own the energy stocks, think about harvesting some losses to offset your gains. I know none of our listeners have ever had a losing trade or a losing year, but think about taxes, think about how you want to be positioned for next year. I also want to talk about some milestones we achieved at Options Express and Schwab this year. And in terms of tools, we brought out Idea Hub for futures this year. If you are a futures options customer, go take a look at it, because it's been a real interesting tool with what's been going on in energy and the volatility we saw on things like the E-mini. So a great place to start to look at ideas. On the Schwab side, Idea Hub is on Schwab Mobile. You'll see it on Street Smart Edge and Schwab.com in 2015. While you're on Street Smart Edge, the 3- and 4-leg trade came up this year. So lots of advances and lots of stuff pending for next year. There's going to be a lot of stuff to talk about in terms of OX tools, going over to the Schwab side. Some of the great stuff that Schwab customers have yearned for will be coming up from the OX development team on the Schwab side in 2015.
Good stuff, and it's great to hear that all the cool tools, I mean, we take them for granted, you know, on the OX side of the fence, on the hardcore option side of the fence, if you will, that we have all this cool stuff. But it's great to see that the Schwab clientele isn't being left out in the cold, that they can't listen to this show and then write in saying, how come I don't have all that cool stuff? So great to see that a lot of that stuff is starting to make it over to their side of the fence as well, because quite frankly, you guys are working on a lot of cool stuff over there at OX, and it's great to see that more people can actually take advantage of it. I'm looking forward to all the new iterations you guys have for the Idea Hub and all sorts of cool stuff. Really, really great stuff. So good stuff, Alex. Thank you for sharing that. And now, because it is Thursday, that means, listeners, it's time for you guys to take over the show, because it's time for some fun in the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you know the drill. Time for the old mail block, the portion of the show where you guys get to sound off with your questions, your comments, your insights, some of your own hilarity as well, whatever you have in store for us. You know how to do it as well. A lot of different ways to make your voices heard on the old program. Surf on over to the mothership, theoptionsinsider.com. Leave your questions or comments there, either on a post as a comment, or you can use the website feedback form. All of that stuff will get to us here on the show. Just be sure to put somewhere, question for the option block so we know how to route it. Of course, find us via email, questions@theoptionsinsider.com. Same rule applies there. Let us know which show you have a question for so we know where to route it. Or find us on Twitter or on Facebook, twitter.com/options, facebook.com/theoptionsinsider, and also on Stock Twits. I always forget what our handle is on Stock Twits. I will pull up. We are Options Insider. Surprise, surprise, on Stock Twits. I know a lot of you guys like to use that as well. So no shortage of ways for you guys to make your questions and your comments known for us here. Starting off with a question here from my friend Evatar. I'm not sure how he likes to pronounce that handle. Either way, interesting handle. He writes, very timely question. Question for the option block program. I would like to know if a surprise rate increase by the Fed in the near term would make Rho a more useful or necessary Greek going forward. Interesting question. I guess it is that time of year to start thinking about Rho. Obviously, this question came in a little bit earlier in the week before the whole Fed announcement, where some people were perhaps speculating that the Fed may jump in a little bit early. Of course, the data coming out of that event and Janet Yellen's comments putting a bit of a kibosh on that. No really impending rate increase, but it does raise the specter of Rho once again. It's kind of the forgotten Greek. When we talk Greeks, we usually talk Delta, Gamma, Theta, Vega. Those are the four primary Greeks most people really refer to. Rho, kind of the forgotten stepchild, of course, the options price sensitivity to interest rates. And as you might imagine, there hasn't really been a lot of rates going on out there for the better part of the last half decade or so. So Rho kind of getting shuffled out of the mix. But perhaps if we do, maybe not in the near term, because it doesn't seem like there's a Fed increase in the near term, but perhaps maybe this time next year or so, if rates are starting to creep up, Rho might perhaps be a little bit more of a factor in the conversation, particularly if you're looking at some big, meaty, longer-term options that have a lot of time value, a lot of cost of carry associated with them. That's where Rho starts to become a factor. Not so much a lot of you guys focusing on these weeklies and things like that, selling weekly premium near the at-the-money. Not so much Rho going on there, but you're talking about the longer-term, meatier stuff. That's where Rho could perhaps become a factor. So maybe longer-term answer to your question, I would probably say maybe in the next, not in the near term, but in maybe about a year or so, Rho might start factoring in to the conversation. Who knows? Maybe a year or so from now, we'll hear Alex on the show plugging his upcoming Rho webinar. Alex, what do you have to say for our friend here, Mr. Evatar? Do you think Rho interest is due to increase on the horizon?
This is a great question, and it comes up, every month in the options industry. And I used to have a great story that went along with this, which was the George Carlin weatherman story, where he's looking at the weather map and he says there's a line of thunderstorms, but behind it is a line of Russian intercontinental ballistic missiles, so I wouldn't sweat the thunderstorms. A surprise move in row would not have a big impact, as you said, Mark, on short-dated options. It would have an impact on longer-dated options. But think of a surprise move in row in interest rates would probably add 10 vol points to the VIX. So the impact on volatility would probably be much bigger than the impact from the rate changing on the option. I mean, if you look at the interest rate component of a weekly option or a monthly option or a 2-month option, and even if interest rates were a full percentage point, which they're not, and you moved it to 1.5 percentage points overnight, the row component would not be big, but boy, would you get a spike in vol. So the vol component would overshadow the row component.
Yes, definitely, particularly for a lot of our nearer term friends, and I'd imagine the lion's share of our audience focused on that nearer term portion of the term structure from an options perspective, and certainly for them, the vol, the gamma impact of that would probably overwhelm anything on the row horizon. But if you are playing on longer term, maybe you're a year plus out, leaps, set it and forget it type of guy, then perhaps row could become a bit more relevant to you down the road. And Alex, I'm looking forward to your upcoming webinar debunking all the myths and mysteries around all things row. Scheduled, I'm sure, for the OX platform early 2015.
It's coming up.
All right. Next up, we have a question from, this one comes from Jack. He writes, "Hi, guys." Hello. He goes on to write, "I had 17 BLMN, that is, if you're not familiar with it, I wasn't that familiar with it till this question, BLMN Brands Inc. I had 17 BLMN Jan 2015 $20 call contracts. BLMN was, as of December 17th, which is yesterday when he wrote this in, during the final trading hour, trading in a range between 23.44 and 23.54. The spread on the calls was $3 to $3.60. As you mentioned, these are $20 calls, so they're fairly in the money calls. It had been $3 to $3.80 previously, the spread on the calls, but my offer there, my order to sell at $3.60 moved the ask down to $3.60. But then it sat there doing almost nothing for almost a half an hour. This is my question. Even with BLMN in the 23.52 to 23.54 area, I could not sell out of these calls at $3.60 with over a month left to expiration. That is unusual in my experience. Is it just that options on this stock have a crazy low volume? Note at about 15.50, which is about 3.50, obviously, BLMN jumped to 23.64, and my sell order filled. Well, surprise, surprise. Before I could cancel and re-enter it at a higher price. I'm still surprised that there was no apparent real sellable time value left in these calls. Good question, Jack. And this is kind of a reference and a question theme we hear a lot, getting to lack of liquidity and how that impacts spreads. So let's parse BLMN a little bit, because this is not a name I really trade very actively, not a name I watch. So after I got your question, I started looking it up a little bit. This is the name, of course, ticker symbol BLMN, closing today 23.65, so a penny up from where he was saying yesterday. Does about 263 contracts a day. So that gives you some inclination of where your about 20 lot falls. You're nearly 10% of the volume on an ADV basis. So bear that in mind when you're trading this one. Did about 400 today, so a little bit more paper, but still not an active name. So that's your first sign that these spreads, yes, they are going to be wide because there's just no one out there playing in these strikes. Now, what you're doing when you're selling an in-the-money call, essentially what you're doing, of course, is at this point, these are pretty deep options. You're essentially trading off stock. So you're not going to sell these for really much more than what you're getting for the stock weight. And the best way to see how much extra time premium is available to you that you could sell above the parity value for the stock is to look at the put on that strike. So I looked here as we were looking it up today. I looked at the Jan 20 put, which is of course the put on your strike, and it's no bid at 15 cents. Now I could just tell you right now, if you go out and try to sell it at 15 cents, you're not going to get it. If you put in a dime offer, you're not going to get these things for a dime. So that should tell you right away, you're not going to get 15 cents worth of time premium. You're not even going to get a dime worth of time premium. I did notice a 4 lot did trade today for a nickel. So if you're lucky, if you put in an offer at a nickel for the 17 lot, you might get filled. Might. Big exclamation point. No one's really lining up to buy these puts with a month to go. So that should give you some clue as to how much time premium you can expect to factor in to your trade. So when you said you had your offer at 360, you were trying to sell these and the stock was about 350, 252. You were trying to sell them at 8 cents over. They're just not going to want to buy them at 8 cents over when they can buy the puts all day for a nickel over. So you can see some of the frustration that goes in with that. If you had got them into I'm sure if you got into the 2355 level and above, if you had noticed that before you canceled the sell order, you probably would have been filled. Obviously, once you get beyond the parity level, they're of course going to fill you. They got a free 4 cents. That happens sometimes. I wouldn't feel too bad about that. Sometimes you have to just be on top of it. You're busy. You probably have a day job. You missed out on 4 cents. Not the end of the world. Sounds like these calls worked out pretty well for you. But yeah, that's probably the best rule of thumb. The quickest way to do that is just look at whatever the counterpoint option is on that strike. So if you have the call, look at the put or vice versa and see how much juice is on that option and how much you can realistically sell it for. And that will give you an exact idea of how much premium over parity. We talk about that all the time on the show, how much premium over parity you can get for that call. And in this case, it was only about a nickel. So unfortunately, your story, I sympathize with you, but it sounds like that's pretty much about what you could expect for this name. Mr. Viceroy, anything you want to add here to our friend, Mr. Jack, who's had some liquidity woes out here in Bloomin' Brands?
No, your explanation, Mark, covered every possible point. A small addition is, and in a sense, that's what you were talking about, Mark, is understand the parity equation and think about what the market maker, dealer, electronic broker is going to have to do if they get these options back. I mean, the most insightful thing you said, Mark, is these are stock. I mean, this is essentially stock, and there's going to be a market in the stock, and the market maker in a thin option doesn't want to take them back 10 minutes before the close without being paid for some of that risk, and that's what you described.
Great question. We love these very timely questions as well, and it does outline issues I'm sure a lot of our listeners are encountering. So keep them coming. Great question there, Mr. Jack. Next up, we have more of a comment. We've seen a variety of these on the same theme since we've launched the app. People are downloading the mobile app and they're just biting off a ton of content. This one came in from looks like Mark Brand. He writes, "Hey, I just downloaded the app and I'm committed to absorbing the entire archive on the app. Learning a lot. Thanks." Well, I more power to you guys out there who can do that. I love you. You're the reason we have a network like that. So I thank you guys. But that is a lot of content. As I mentioned at the top of the show, that's I haven't added it all up lately, but it's probably well over 1,000 hours at this point. Indeed, almost 400 of those alone just in the option block feed. So there is a lot of good stuff out there. We've had this network coming up on January. It'll be 8 years. So there's a lot of content going back to the very early days of the network when it was just me with the Options Insider radio show, which was an interview show / listener question show / what's trading show / pretty much everything under the sun. It was way too long. It was like 2 hours. It was crazy. It was a lot of work. We've since have morphed that model, as you can see, into what is now the full network with a wide variety of shows covering a wide variety of topics, some of which I am on, many of which I am not, which I'm also very thankful for. It frees up some time in my day. Not that I don't like talking to you guys on the radio. I love it, but I do have other things to do here, surprise, surprise, on a daily basis. But moral of the story, I'm really glad you guys are enjoying the app. I'm really glad you're enjoying the content. I would just say pace yourself. There's 1,000 hours in there. There's a lot for you guys to bite off. We are working, I mentioned it before, we are working, maybe it's a lot of work as you might imagine, but we are working on maybe trying to surface some of that early stuff from the 2007 to like 2012, 2013 range that some of you may have missed if you're newer additions to the show, and maybe intimidating just to go back and see this massive archive. Maybe breaking some of those conversations out, some of those discussions, maybe things that we're talking about today here, different discussions that are interesting, and breaking those out into separate little mini episodes and maybe putting those up in some sort of best of feeds. You guys can check those out as well. So maybe make it a little bit easier for you guys to rediscover some of the things you may have missed and you just can't find them because there's so much out there. But we do love you guys. We love all you guys who dive in and really bite off the full app worth of content. If you want to do it, if you have a long commute, you have a long flight coming up or whatever, we certainly have got you covered. So by all means, we salute you guys. You are the unsung heroes of the network who really bite off more than we can chew. And before we go, we do have a question. A couple of listeners write in all the time. A lot of listeners out there probably have English as their second language. And one guy, Ricky, has been writing in quite a bit with the same question. He writes, I would like to know about trading on index with an option. I'm not making fun of him. That's just the way he wrote it. I don't want to change it up in case I change the tone of his question. Obviously, a very difficult question to answer because there's a lot in there. But obviously, English is not his first language. But still, Alex, we touched on it earlier on the show, kind of some of the issues we're seeing now with people who have left shorts open, for example, and the index gapping up into expiration and that kind of coming back to bite them. Maybe any 10,000-foot top-level general tips or topics you would address here to our friend Ricky, who is interested in learning more about trading index options and sounds like maybe is just coming to it for the first time.
Yeah, three things, and they're all kind of housekeeping issues. Number one, understand trading hours because they trade 15 minutes longer. Understand expiration, and understand that they price off an implied forward. They price off of a futures contract, and that's especially important in that period between 3 o'clock Chicago and 3:15 Chicago when index options still trade, even though the cash market has stopped trading. Find yourself a good book on options or listen to the show and understand what can go on in that 15-minute period. But they're a terrific product. I mean, I've grown up with index options, and I grew up when the OEX was doing $1 million a day and the SPX didn't trade much, and now that's kind of flipped itself. But they're a terrific product for getting broad market exposure. I want to make one other comment, Mark. You talked about the network and the amount of content on the network. I've been in the business, I think longer than anyone who's still above ground. And I listen to at least 2 or 3 hours every week. And I'm going to tell you, 2 weeks ago on our show, Andrew did about a 5-minute discussion of trading butterflies going into expiration. And I know this is where people roll their eyes, where I get very dorky academic. But I'm going to tell you that 5-minute explanation, I learned more about flies going into expiration and expiration pricing and the mindset of the liquidity provider than I had ever learned in the 40 years I've been in the business. So, you got to harvest nuggets out of the shows. And I listen to a handful of shows. I listen to Henry, but I think there are nuggets of gold in some of this. And, some of it's a little lighter. And sometimes we have fun, but there's good stuff from good people here.
Well, I appreciate that, sir. Thank you for your kind words. You certainly would know. You have been around. You're right. You have been around the business for a while. You've seen a lot of crazy things come and go. Many crazier actually than what we do here on Insider on a regular basis. But you're right. There is a lot of good content, and some people, they may check out one show, maybe just the option block. They don't hear the show you mentioned, the Trading Tech Talk show, or they don't hear the Advisors Options show, or maybe vice versa. They're on one of those. They don't hear the Futures Options Roundtable or Options Bootcamp or the Option Block. A lot of different shows, a lot of different audiences. And I know a lot of you also get the network fee, which is everything. So you can, of course, sample to your heart's content all the different shows. We've also tweaked really very recently, listeners, at the website. So the player there on the homepage now shows the most recent episode. A very basic tweak, but for whatever reason, we weren't doing that before. A lot of things going on the website that we're upgrading. Again, it's been around 8 years, so some tweaks need to be made. And that was one we made recently so that you guys can go to the homepage and just get the most recent episode. Whatever the newest thing is on the network, could be our daily news show, could be the option block, ball views, could be boot camp, whatever the case may be. You can check it out right there on the homepage. So that's a good place to go and check out all that stuff as well. Okay, great questions from everybody. We really ran the gamut today. Very, very rudimentary, beginner beginner questions, some comments, some very in-depth trading questions. I love it. You guys are really, really knocking out of the park with the questions. Keep them coming. We love to hear from you. That's really the reason that we do this show. And now it's time for us to keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, you know what time it is. It's time for Around the Block, the portion of the show where we tell you what we're watching, what we're keeping an eye on for the rest of this week into the weekend. A lot of weird stuff, a lot of macro things cooking as the sessions are progressing here going into the weekend. So a lot to keep an eye on. Perhaps, Mr. Sebastian, we'll start with you. What are you keeping an eye on for the rest of this week into the old weekend?
Well, I'm feeling relatively confident that it's possible that between now and next Thursday's show, the S&P 500 moves less than it did today. So I just don't see another 50 points out of it. And so I think we're finally gonna see some slowness. I think we could see the VIX finally start to back off a little bit. If the market slows down, we are heading into a holiday week. We're already in the holidays for it's already Hanukkah. Happy Hanukkah, Alex. And then we've got Christmas next week, so things are going to be a little slower.
Yeah, everyone said that pretty much going into December. Going to be the slow month, sell your premium, go away, celebrate the holidays. And so far this month, definitely not disappointing from an overall vol and movement perspective. 10-day realized out there in the S&P right now, 17%. So some activity out there, I should say, in them there hills. And Mr. Viceroy, in addition to Hanukkah, what are you keeping an eye on for the rest of this week, sir?
I'm taking the other side of Mark's trade. I think we're going to see some real activity and volatility here. I think given what's going on in world markets, Japanese 10-year yielding 0.35, German 10-year yielding 0.62. Those were the basis for the carry trades. That's where all the borrowing was going on, and the money was being invested in the emerging markets. I think there's trouble ahead in the emerging space. Mentioned Venezuela. Russia's still going to be a concern here. But looking at totally macroeconomic, I think there will be some tax selling here in the U.S. market, and that will be in the energy space, might be in some of the momentum issues. Amazon is still down for the year, so there'll be some tax selling. But I think this is all driven by macro and geopolitical events. As I said, Janet Yellen is my poster child right now, and I think we're going to see that. And the rally is not going to be a Santa Claus rally; it's going to be a Janet Yellen rally, and I think we can still see that here in the last 10 or 12 trading days of the year.
All right, thank you for that, Mr. Alex. That's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, let me check in with each of my cohorts here on the old All-Star panel, see what they have cooking that may interest you. Starting off with you, Mr. Seabass, what's coming down the pike in the land o' the pit?
We're going to be doing another one-day seminar in January, but if you missed the boot camp, you can still catch the recordings. optionpit.com/bootcamp and use the code INSIDER to take 20% off.
Good savings. We love it. So there you go, listeners. Get yourself a little holiday present and save some green on the great classes and courses and webinars over there at optionpit.com. And Mr. Alex, I know things are winding down over there at OX as well, but anything else on the calendar for the rest of this year into early 2015?
Yeah, actually, the education unit at Options Express never sleeps. This Monday, December 22nd, Nina's going to do a webinar looking at the platform and showcasing the advanced order features and the walk limit. Tuesday, I'm going to do Idea Hub at 2 o'clock Chicago time. And then Tuesday, right after me, Nina's going to do charting for new traders. We will do webinars all the way up, I think, until December 30th this year. Just go to optionsexpress.com. You don't need a login for the education resources. Click on the Educate tab. All the webinars, all the live events, although we're done with live events for this year, are free.
I like it. Hard workers over there at OX going all the way up right until the end of the year. Well done, sir. We take our hats off to you. Of course, you have many hats over there, so perhaps our hats are not as impressive as yours. All right, and that's going to do it for this episode of the Option Block. On behalf of the Greasy Meatball and the Viceroy and Uncle Mike, wherever he is floating around out there on assignment, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for sending in such great questions. Keep them coming, and we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.